What's up, legends? Welcome back to my channel. It has been a while. I just realized today, actually, I haven't done an update for a week now. So I thought I better get on here, have a look at what's going on. Nice little Sunday night update before the market opens and, catch up from my last update till now. So I'm going to get into what I talked about on that video and what has happened since, and we'll just investigate what may potentially be happening next, as well as just make you aware of some dates and things like that that are going on, things that we need to be aware of for this week. So I'm going to start on a pretty high time frame, considering Bitcoin has been, bullish for a little while now. I want to go through a little bit more of the investing side on this video rather than just day trading, because, with Bitcoin having its nice move to the upside, there's potential to start looking at altcoins. I don't know because I haven't actually charted that yet. We're going to do that literally together right now and see if there is opportunities coming up. So we got to start with Bitcoin first. If that is the kind of stuff that you're interested in, be sure to like and hit subscribe if you're not already subscribed. And let's get into this video. So first of all, starting with Bitcoin on the daily, we've crossed all of the important EMAs for the method. We did have a pretty not obvious looking W formation down here at the start of the year, and we created our rise level 1. Now, after this rise level 1, this was during the month that I wasn't on social media, so I apologize for that, but everybody needs a break every now and then. But after this rise level 1 and we had this retracement, this area here is where everyone was calling this rise level 2. To me, it wasn't a rise level 2 because rises on the daily time frame, they don't look like that. They look like this. They look a lot more powerful on a daily time frame. And really, for this little kind of area here, we only had this one green vector candle and then not really any follow through. So the way that I see that is that this move here was just an extension of the original move, and we were waiting for the pullback, which we ended up getting. This pullback took us into a recovery of this vector right here. It would have made it around about the halfway mark, which was kind of perfect. And on lower time frames, it did create a W formation. I'm going to talk about that W formation shortly. But let's have a look at where we are now, because we have actually, if we zoom out, we've had a full recovery of this red vector right here on the daily time frame, which is, if you're a hardcore bull, it's a very good sign. And then we go into chop up around here. We don't really have another vector candle to recover on the daily time frame until around about this portion of this vector candle right here. Is my mouse working? It's not. There we go. Sorry for that little intermission there, but this is the vector candle that I'm talking about. This little bit that I've highlighted is the unrecovered portion of it. That puts price between about 31,700 to 34,270 to 80-ish kind of area. So the thing is, though, that may not be straight up to there. It may be a situation like this as well, where if it does turn out that what we've had so far is that this is a W formation, this is rise 1, that's the retrace, this is rise 2, then we may get a retrace before we hit up there to that level 3 level. So that's definitely possible. A retest of any of those EMAs is going to be great, but especially if it comes back to now retest into this green unrecovered vector candle here on the daily, which even if it did a full 100% recovery of that vector, that's going to be around the 200 EMA, and that's great. So that's a retest of about 21,750 to 24,000. A big range, but it's a daily time frame, so that's how it is. But you can see within that range, there are a number of EMAs that it could bounce off. The 20 EMAs, the red one, the 50 is the blue one, and the 200 is the yellow ones. So in an ideal world, that's what we'll get. But the issue that I have is that we're not really operating in an ideal world right now where things are, that easy for us. And the thing about this, I don't know if you've ever heard the saying, when there's an extreme, something else is going on. So that's kind of what I'm thinking right now. This is extreme price action, considering like how the whole world is. I understand people are scared of banks collapsing, and so they're moving into Bitcoin for that reason. However, if that's the only reason that Bitcoin is bullish, and also people saying the money printer is turned back on, if that's the only reason Bitcoin is bullish, then this won't last. Because if Bitcoin only has a chance of upside if the Fed is printing, then what hope does crypto have? That's not what we want. We don't want the belief to come into crypto just because the money printers are on. That's actually really not a good thing, and it's not sustainable. So if you really believe that Bitcoin is bullish because the money printers are back on, then you should even more believe that this is a case of an extreme happening when something else is really going on. Now you might say, well, you're just saying that because you're salty because you didn't long. No, I've actually been long since the second side of this W. I longed at 15,700 on a March contract, and I'm still long on that. And that is another warning to you, is that the March contracts, for everybody who went long on a futures leverage contract down here at that 15,700, 16K, whatever level that they longed at, the longest contract that you could long on at that time was a March contract, meaning everyone who has longed and held for this entire period up to 27K on leverage has to close their positions at the end of this month. So I want you to be careful about that, because that contract closing date does bring some volatility to the market, and contract closing can cause, a bit of a sharp change in trend or a pullback at the very least, but we won't have a choice. And for the most part, like if you trade futures on 3-month contracts like I try to do, then I'm telling you as a person who does that I try to get my trade as early into that contract starting as I can, and I try to hold it for as long as the trend is there. In this case, I've been lucky that I've been able to hold it almost for a whole contract, but I don't wait till the expiry date to close my trade, and neither would anybody else who trades this way, because that leaves us closing a trade not under our control. So we usually start closing those trades a couple of days before the contracts expire, and so that brings us to the late 20s of March. So just keep that in mind, that is one thing that will be happening for anyone who did long, because there is still a lot of liquidity below that price, which means that there are stop losses below that. Oh, sorry, not stop losses. It means there are liquidation levels below that price. And look, to be fair, they have lightened up a lot. I will show you that, but they're still there, which means that there are still a lot of people who are in long positions from 16K. And if they are on futures contracts like I was, because there's no way you would hold it this long on a perpetual contract, that's just crazy. But if they are, they're going to have to be closing those positions towards the end of this month. So that's one thing to watch out for. Another thing to watch out for is a very big news week that we've got coming up, which is of course FOMC statement, federal funds rate is coming out as well. And one thing that I have noticed a lot is when we do have FOMC, as you know, this model consists of a 3-day trend, a midweek reversal, 3-day trend the other way, close your trade Friday. If you don't know that, that's the method. If you want to learn it, come learn it, because it's a pretty good way to trade, predictable most of the time, not this week. But the thing is what I do find is that when we are leading up into a major news event, something like an FOMC, that model can stretch out over 2 weeks. So it may make sense why we had a whole week's uptrend leading into the FOMC, and there is a chance that the FOMC does cause a reversal. So besides key levels that we've got to watch out for this week, we also have to watch out for some key dates. Now let me show you that liquidity that I was talking about in the trusty old high block capital. So I've zoomed out here to a 3-month level because I'm talking about people who went long at the 15,600-ish kind of range. And you can see down here that 15,200, it's still there. So those are the liquidation levels of people who longed around the area that I did. And, whilst we're not going to hit that level and those people aren't going to get liquidated, because surely you would take profit a lot before that, it just goes to show that those contracts are there. And I'm interested to see if that does lighten up after March, once the expiries are done and dusted with. But on that note, let's have a look at what else is going on that is really quite key here. We've got a very, very bright level standing out, still at 18,800. Now, I recently did a video with 𝗖𝗶𝘃𝗃𝗲 and we talked about this 18,800 level. We were talking about it before this pullback. We talked about 20,800 and 18,800. So the 20,800 obviously got taken on the pullback before this level 2 rise, but the 18,800 is still there. and it's still very, very bright. So we've got to keep that in mind, and we've got to monitor that as well. But when we look up above price, we don't really have the same kind of thing. So we don't really have people jumping into huge level shorts. But let's have a look at a little bit closer time frame just to see what's been going on this weekend, because over the weekend it will help to show us what the retail sentiment is. So if I zoom in on just this area here, I mean, you can see before I zoom in on it, there is a level down there at 22k, but I'm not gonna grab that one. I just really want to talk about what's actually right in this zone here. So currently Bitcoin is at 27,000, almost exact, and we have a pretty high level of liquidity up here at 27,450, which is very, very close to price. And I mean, that could get taken with a stop hunt, which wouldn't surprise me. You know, we do have fake move week beginning happening almost any moment now. So keep an eye out for that level. If they take that and they're happy to keep going, then there's another level at around 28,025. But I actually want to reset this because I want to see if there's something closer to that vector candle area that we talked about. So let's go over here. This level's sitting at 29,650, and even that's not as high as I need it to go to get into that zone, that unrecovered zone. So that is a bit of a worry that, you know, maybe there isn't too much above to keep us going all the way to that level. But like I said, we don't necessarily have to go straight up to there. We could have a pullback, then go for that level as the level 3 rise on the daily, and that will bring in more liquidity, which means that we then have to reassess and have a look at these heat maps again. So for now it's not there, but it may come with a pullback, and if it does, then we want to know what levels may the pullback go to. So let's have a look at these levels below price. We've got about 26.6 down here. We've got a big one at about, say, 24,450. And then we've got down here, which you can't see on the screen, but I'll just tell you, it is 21,725. So now if I put all of those levels on my chart here, you can see that the two liquidation levels below price, the 24,450 and the 21,725, do bring us back somewhere close to that area of interest. So, you know, again, like I said, it would be the perfect play if it happened, but right now the market makers are inducing us to think irrationally, and they're not giving us perfect entries. So just bear in mind, it may not happen. But again, don't force a trade. Don't ever chase price. Let price come to you. So for me, if I was to open a brand new long position on this, price would have to come to me in my area of interest, which, as I said, was between 21,750 to about 24,050-ish kind of area. So that's all kind of looking pretty good to me, pending, of course, FOMC, because anything can happen. But also, don't forget, by the time FOMC happens, because what day is it happening? It is happening on Thursday. It is possible that we have a bit of a chop, bit of whatever going on, and we actually retrace. We could either retrace before FOMC into this zone, shoot up out of it for level 3, or we could chop around, have a bad news event for FOMC, which causes that retracement down, and then we just continue. So really have to see how what the fake move is when the markets open this week. That's going to give us a hint if the start of next week is going to be to the downside or it's going to be to the upside. I did notice that there was some profit taking going on over this weekend. On the smaller time frames, you can see that. So let's go down and have a look. But this is kind of the big picture idea. I would like to see Bitcoin retrace into my area of interest, and then we have a third level rise, and then, you know, you can go the depth of hell after that. I really don't care. But this is kind of making sense and looking good to me. But let's go have a look at the 4 hour. It's probably really not much to talk about on there. I mean, the 4 hour to me, I'm not going to spend too much time here, but I will just say that the 4 hour does look like it's had potentially 2 rises. It could be 3, but it does look like this kind of is all part of 1, and this is the retracement, and this is all kind of part of 2. So see how that goes. But if this does come back, I mean, these aren't high volume candles, so this whole move here is a bit of a worry. Actually, let me compare. This is actually a worry, because look at this. We've got a divergence here where we've got this rising price, but we have declining volume on the 4 hour. This adds to my suspicion that the move is fake. And you know, I'm an order book trader. I've been trading the order books, you know, my whole trading life, and there hasn't been orders in the last, like since this whole run up, the order books have been empty. There is definitely something going on. Binance in particular, orders have been empty. And do you know what? There has been a huge spike in volume on OKX, and that's not a recommendation. You guys know I trade on OKX. I love trading there. I've traded there for a long time now. I can leverage trade, spot trade, and do whatever I want. But it actually is quite nice to see the volume coming in there, because I know how hard the guys work over at OKX. So if you are looking for an exchange to trade on, make sure you go do your own due diligence. Go check it out. They have their audits. They have all of that. If you like it, if you want to try it, there is a link in the description down below to get 15% discount off your trading fees for life, as well as other sign-up bonuses. But you make sure that you like it first. Anyway, I digress. What I was talking about was the volume, and the volume just wasn't there on Binance this week. And now when you're looking at the 4-hour time frame, you can see that. Really, that does scream fake move, as much as people are going to be like, oh, you're salty. No, I'm just telling you what I see. So anyway, we have to keep an eye out on that. Let's have a look at the 1-hour time frame. Mind you, to be very, very clear, I'm very happy to trade fake moves as long as I know that they're fake, and that I don't hang on to the idea that the next bull market is here. As long as you can take your profit at the end of the fake move, then there's nothing to worry about. Now let's talk about since my last update to where we are now. And this was last weekend when I did an update. This was in the midst of the whole banking crisis, and we didn't know what was going to happen, if they were going to get bailouts or not, because it was the weekend and there were no announcements. So this was the box that I had marked out on my last update. And I had mentioned to you to just wait to see which way it breaks out, to give you a hint of what was going on, because we did have a W formation, but we were also in the process. I think when I filmed, we were around about this candle right here. So this one here. So at the same time as having a W and having terribly, terribly bad news, there was potential for that M to also potentially be created as well. We didn't have enough market structure to know that at the time, but there was a potential, because I'm pretty sure it was around here. So what I suggested was draw your box around where people were trapped on the weekend. That was the high, that was the low that they were trapped, and your trigger is a breakout of that. This here was the breakout. This candle here was the retest, and the rest is history. So it was a difficult one because it wasn't a perfect W formation, but it was a W that ended up creating the low of the week, which is the ideal place to take a trade. I did open a second long position here, but I only opened a small position, just I call it a skill test position, because sometimes I open trades not to make money, but just to test my skill. So this was a skill test position, and currently that position is still open, considering closing it very soon. So from there, we did have our rise here. We've had a board meeting. We had another rise through here, another board meeting, and a rise through here. So it was a pretty big, epic week. Now, what I'm sort of cautious about is it does look like the market maker is building a bull flag. What I don't like about that is when the market maker is building a bull flag at level 3, it's usually a trap. So I'm not too sure about that. If the fake move this week, when the market's open or come close to opening, it really could happen anytime from this video onwards. But if we get a fake move up that is kind of back into this area, or even comes and grabs this liquidity, and then we have the real move down there, then that's going to confirm to me that this actually was a bull flag at level 3, which is literally the ultimate trap. Bull flags are great at the end of level 1. They're great at the end of level 2. They are not great at level 3. If they ever play out at level 3, it was luck, not skill. So we just have to keep that in mind. Another thing too is that wicks change at level 3 from one side to the other to give you a hint of who the market maker is trying to trap. If we have a look at what has been going on this weekend so far, we've had these wicks up here that have not been returned to at this point in time. We have this wick down here that has not been returned to at time. You draw this exact same weekend box. So from the end of US closing on Friday to wherever we are right now, I like to draw my box around the candle closes, because then it becomes clear to me who's being trapped. Now, this is actually a typical weekend trap where you initially will have the wicks that give you an idea of what side they're trapping. So then that happens towards the beginning of the weekend. So if the wicks are to the upside, they're trying to trap longs. They're trying to induce people to go long. And these are people who are, breakout traders. Like, let's just say they had resistance drawn there. These little wicks, they put a little buy stop above that because they think if it breaks out again with a massive candle like this or a massive candle like this, I don't want to miss it. So they put a little buy stop order here. This wick picks up your buy stop and then it drags you back into the zone and keeps you trapped for the whole weekend. Why I don't like trading weekends. But after they've done that trap, so now longs are trapped here. Generally, a breakout trader, if they're going to put a buy stop here, they're going to put, or here or wherever, they're going to put their stop loss under what they believe to be the support of that range. So if they believe that is the support of that range, then their long position is going to look something like this, with their stop loss just under these wicks of these candles here. It's not about the target, but that's your entry, that's your stop loss. This wick right here has already taken them out. So the longs that were trapped up here have already been trapped and taken out. Could they come back for more with the fake move week beginning? Yeah, they could. Or maybe they've already trapped as many people as they need to trap and we're on the way to a reversal, because it is possible that as long as this area remains clear, it is possible that this is an M forming right now. But I would want to make sure that price, I kind of want to make sure price does not come back into this zone right here. And the reason that I say that is because this here is the vector candle. So this is going to be the highest candle volume for the weekend that we're trapping longs to the upside. So that you can see here this volume spike, the red volume spike there, that's the one right there. So if this continues to break down, if this wick on this candle right now cannot get back into the trap trader zone, then the next step is for price to break that 50 EMA with volume. So you want to see another red vector break that 50 EMA. If it were to do that, it would be likely that it also takes out this liquidation level. So that's very interesting indeed. And if it did all of that, so if it did create our second side M, took out this liquidity, then it would be likely that it's coming down for the lower ones that we mentioned earlier. So that's kind of what I'm looking for. At the same time, the timing being fake move week beginning, because the fake move could either be that move to the downside and then we continue up for the rest of the week, or a fake move could be a stop hunt that takes this liquidity out first, then we head down. But it is shaping up to look like these traders here that took positions here at this point in time have not yet been released. When will they be released? If price comes back into that box. So just keep that in mind. Price comes into that box, then you're looking for them to come and take the higher levels of liquidity. Now, I want to have a look at very quickly just Ethereum, not to trade it, but I just want to compare Ethereum USDT with Ethereum Bitcoin, because I want to get a bit of an idea of where we are in that cycle and whether there's any, potential investing opportunity in altcoins yet, because as you may know, we've had this move to the upside. All of the dominance has been in Bitcoin, and once Bitcoin's maybe slowed down a little bit, it might move into altcoins next. So I just kind of want a bit of a heads up on that. And the thing is, I haven't been all that interested in altcoins themselves because they have been lagging behind Bitcoin. So it was just better having your attention into Bitcoin. But if we have a look at Ethereum at a glance on the daily, you can see Ethereum's just not had as good a move. It has broken these levels here, but the last vector that it has to recover, which it hasn't really even come close to, is this one all the way up here that we've never entered back into. So that's at 2150 to 2450, and yeah, we're nowhere near that. So the USDT pair is not all that exciting, but if we're going to invest in Ethereum, what matters is the ETH-BTC chart, and that is bearish, as you can see. So as long as ETH-BTC is bearish, or any altcoin BTC is bearish, you should have all eyes on Bitcoin only. Once that changes, then it's time to go into altcoins. But what you can do in the meantime is plan ahead, because if that dominance starts to shift and the Bitcoin dominance starts to drop and maybe the total 2 or total 3 starts to rise, then it may actually be that altcoins are going to go next. So we kind of want to watch this zone here. A good practice would be just to mark out your vector zones on your BTC pairs and set some alerts. And if they go off, come and see if they're looking for a bounce. But right now, it doesn't. I'm not interested in altcoins for as long as they are bearish against Bitcoin. That's all I have for you. I hope that you enjoyed that. Probably this is going to be a longer video, but I just wanted to catch up with you because yeah, the whole week just flew by and I didn't get to do it, but I'm going to try and be a little bit more regular from this week. So be sure to like and subscribe if you enjoyed this video. Consider coming and joining us, learn the method in full. Everything is online. You can take it at your own pace. And if you're looking for an exchange to trade on, check out the link below for OKX. I will see you guys in the next video.